Welcome, everybody. Welcome, welcome. We'll wait and let you guys funnel in here. It's so good to see you guys on here. I love to see your names on here. I love it. Okay, so we're going to dive in. For those of you that don't know who we are MF Capital Partners. We focus on the acquisition and management of opportunistic and value-add multifamily properties. And we specialize in repositioning well-located assets in emerging markets to protect y'all's income, to protect your capital, and provide high-yield returns. So as you can see, we have a couple people on here. My name's Melissa. I'm the VP of Investor Relations. We've got Ryan Wooley. He's the managing partner of MF Capital Partners and the co-founder. And then we also have Lindsey Daniels. She's our VP of Asset Management. And we're going to be the ones to talk about this incredible opportunity. And we're excited to dive in. But before we dive into the meat and potatoes, let's talk about a couple logistics. So we have down at the bottom of your screen, you're going to see a chat. That's where you can chat to those of us on the panel. And then the Q&A is where you can ask us specific questions. As we're going through this opportunity, we want to hear from you. We want to make sure that we get your questions answered. So don't hesitate to jump in there. Make sure to put in the question that you're wondering, and we'll make sure to get you taken care of. But also, you're going to watch. We have a rock star, Tasha. She's going to be in the chat dropping some links. So y'all are going to want to watch for those links and follow that to really dive into this opportunity. Now, we are going to keep this webinar at 30 minutes. So we're going to fly through the business plan, but we're going to make sure that we explain the opportunity, we explain the market, and really why this is an incredible opportunity for you guys. But first, we want to share our gratitude. You guys are incredible and have been investing with us for a very long time. And if you haven't, then it's about time you guys start. It's truly been, I know I can speak for the team when I say it's been so rewarding to be able to work with you guys and all of our investors on all of our projects. But if you missed the chance to get in on the Akahi or the Aloha Fund, obviously we have good news. This is why we're here today. We have this exciting opportunity that you guys have the unique ability to be a part of. Orlando Sky Apartments. As you guys can assume, it's in Orlando, Florida. We closed on this property on December 23rd. And so now we're raising for the CapEx. So the full raise is 7 million, as you'll see when we dive in, but we have a smaller amount. So we're raising 1.7. So it's going to be a tight time frame. You're going to want to be able to jump in as soon as you can. This is an opportunity that y'all have been waiting for. So in considering the success that we have been so fortunate to have over the last few years, the last couple of projects we've been on, we strongly recommend that you jump on board with this investment opportunity as fast as you can and create your soft commitment. If you would like to schedule a call with our investor relations team for more information, like I said earlier, you'll be able to click the link in the comments. All right, enough is enough. Let's dive into this property. Ryan, Lindsey, are you guys ready yet?
How do you follow that energy, man? Seriously, it is just maybe too much energy with 4 kids, right? I mean, end of the day, working man, you should just be tired, So, anyways, it's super good to be on here. Talk about opportunity. It's called Waters.
It's all water right here.
Oh boy, I love it. Listen, we're super excited to be on here. I'd love to ask one question though, and you would love to know our audience and who's on here. How many of y'all know who we are, MF Capital Partners, and how many is your first time? Love to see in the chat. Go ahead and put it in the chat. If you know who we are, you've been on one of these calls before, or this is your first time joining us.
Oh, we've got a good mix here.
We do.
This is awesome.
Awesome.
Welcome. If it's your first time, then you'll see the crazy up front. This is perfect.
I love it. It's the first time you get to see. One thing I love about our group is we're full of energy, right? Like we'd love to have a good time, and you would like to talk facts as well, And so what's great about this is Orlando Sky. It's one of the first properties where our headquarters are in Orlando, Florida, actually in Ocoee. A lot of people don't know where Ocoee is, and some people can't pronounce Ocoee, but Ocoee is just outside of Orlando. property. It's about 10, 15 minutes from our headquarters. You know, it's our first property, you know, in Florida that we've owned, you know, and this is what I love. I've lived in Florida for 12 years. And what I love is Florida is one of the top markets in the country right now, right? When we talk about rent growth in the 20%, right? In the 20%, you know, it gets us super excited to be able to present y'all with an opportunity. You know, one thing I'd ask is this before we jump into the facts is, look, you know, like Melissa said, the purpose of this call, we're looking to raise 1.75 million to you know, for the CapEx. You know, to be able to put this property, put the returns where we want them to be. You know, one thing I would ask you guys is this: is where are you? If this is your first time, where are you placing your money currently? Right? You know, I know that I invested a little over $1 million myself this last year in different investments, and we're always looking for different opportunity to make our money work for us. So, what are you currently doing right now? And I'd ask you in the chat, where are you all currently investing your money? If this is your first time with us, where are you currently investing your money right now? Stocks. See, stocks. Where else are you guys investing your money? Multifamily assets. I love that, Julius. Stocks, certificates, stocks, crowdfunding, crypto. Oh boy, crypto. We could talk Nabel about that. What? Rick Ward, I love it. Good to see you on here, Rick. ETFs, first time investing. Awesome. Lovely. Love it. Love it. So, you know, as we talk, you know, they keep coming in, you know, as we talk today, and as Melissa talks about the returns of, you know, the deal, right? It is, you know, it reminds me of going in. I went into the bank the other day, and, you know, you know, obviously we're trying to diversify our assets, right? You know, where do we invest our money? My wife and I just got married in November, Melissa, right? You know, I have an audience. She's actually sitting over here watching, first time watching me on a video. So we'll see if she critiques me. You know, but you know, I go into the bank and they say, hey, listen, we want you to invest in mutual funds, right? And I remember the conversation because I talked to you right afterwards about it, right? And I said, okay, well, what's the 10-year right now? And they said the 10 years at 10.3%. And I said, holy shit, 10.3%. I said, help me understand, why would I invest when our track record is at 37%, you know, or 38%, actually, you corrected me the other day, 38% annual rate of return. What's that?
38.02.
38.02. You would know that because you're over investor relations. So I love that. You know, and so, you know, my question to them is, you know, even at our projected, one thing we love to do is under promise, over deliver. You know, my role in the company is to do underwriting or final underwriting on the deals that we do, right? You know, and then I get with Lindsey, who is amazing on here, who oversees the operations, right? She's the one that ensures as we look at the business plan, as we create the business plan, that she can actually do it, right? That she can actually get these numbers and that she signs off, says yes or no, right? Lindsey is critical to our business, right? In making the decisions on if a property is going to actually do it, right? You know, so I underwrite for the property, but, you know, getting back to that 10.3, hey, listen, 10.3 is okay, it's conservative, but how many of y'all would love to see, you know, 18, 19, 20% return on your money? Saw there were some cryptos, 401ks on there. We know what's happening out there. There's bloodbaths in the market, right? In 401ks, you know, all that, yes, please, right? Absolutely, right? One of the things in under promising, over delivering, and being able to over deliver, you know, is being able to pick properties like this that have been mismanaged, you know, where we can go and take it, you know, and be able to get you guys the returns that you're looking for. This property, right, is $300 under market rents. $300 under market rent. You know, the average, you know, rents are right around 900. You know, the market is right around 1,200. I'll let Lindsey go more into that in just a minute. But, you know, a lot of those properties in the past we've done that we've exited and we've sold, we're around the same, you know, around 300, right? And be able to get the returns that we did. We just sold off a portfolio in South Carolina where a lot of those properties were very, very similar, right? And we were able to get 30 plus, you know, percent, you know, above 30%. Some were close to 60. I think Tropical was 60, right?
Wait, and how far under market rent was Tropical?
Yeah, about the same, 300, right? Right around the same. You know, and so seeing properties like this that are under, right? I remember Lindsey getting super excited about it, right? But like that they were mismanaged, being able to bring our property management we have good relationships with, to be able to implement the business plan that you were going to go over here in a minute, right? To be able to get the returns that you guys, you know, are looking for. So for those of you that's the first time y'all are, you know, investing in 401ks, right? Once again, I would say, what is your 401k doing, right? And after you see Orlando Sky and the returns that Orlando Sky has, what decision are you going to make to invest to be able to do the things you guys want to do as investors. One of the things we pride ourselves with, that we're going to focus on in 2023, right? That we're really looking at is investor experience. What is the experience that y'all have with MF Capital Partners, right? To be able to achieve, right, the returns that you're looking for, So I'm going to let Lindsey take it over on this business plan, and then we can interject, Melissa, as we have questions, or, as y'all have questions, feel free to put them in the chat. We want this to be interactive as well, and be able to put it in. And like Melissa said, Tasha's going to be putting it there because I know some of y'all are waiting to invest. You're ready to invest. Like I said, this is nothing that's going to come in the future. This deal's already closed, right? It's a killer deal. And Lindsey's going to go over those details so you guys can see how good of a deal it actually is.
And before Lindsey dives into the market, just to give you guys an overview of the property, it's 140 units. We purchased this property for $15.7 million. Our equity part will be 18% annual rate of return, and the total equity raise is $7 million. So let's dive in a little bit.
Melissa.
Yep, go ahead.
Sorry, just one thing I wanted to point out really quickly as you went over the purchase price of the 15.7 is the original asking was actually 17.5, and just through negotiations, Ryan and one of the partners was able to negotiate it, and out of the gate, that's equity created right there just by him doing what he's best at, right?
Well, thank you for that.
I'm so glad you mentioned that. Absolutely, it's critical.
Well, I'm glad Lindsey did, because Melissa, sometimes you don't think if I'm a good negotiator or not. I'm glad that someone on the team thinks so, right? So Lindsey, thank you for that.
Listen, I know you're a good negotiator, which is why I don't negotiate with you. No way, Matt. Okay, so y'all, the distribution of the preferred return is going to be 6%, and the minimum investment amount is $50,000. Now we do have a quick turnaround, so the due date for the funds is February 6th. The initial distribution will begin in 3 quarters. Now, that is my 30,000 foot view level of the entire return. Now let's jump into the actual meat and potatoes, which is why y'all are here. So, Lindsey, I almost called you Megan. You're not a Megan. You don't even look like a Megan. Lindsey, do you want to go over really why did we choose Orlando? Why is that an area where we're investing?
Yeah, absolutely. And I'm not going to read through the highlights. I'm going to just kind of speak off of what we saw, what we're currently seeing, since we actually are already full steam ahead, right, with taking on the management and oversight of it. So regardless of what's currently been happening with the economy, any headwinds and just the economy as a whole, Orlando has remained in the top 3 consistently for rent growth, despite any of these changes with interest rates. It has not teetered at all to date. That said, going into Orlando Sky, right out of the gate, since we already, we're already there, we've had 5 move-ins in the last 2 weeks. All of them average rents were about $950, and even a little lower, somewhere closer to the $850. And just by turning the units, which they are the original interiors, they're in good shape, but they're vintage. I'll call it vintage. But by turning them and getting them rent ready, we were able to rent those units on average at $1,250, and that's, or $1,150, excuse me, and that's just showing up. That is just us, and that's rents. We're also including RUBS bill back for utilities and other income where we can as well. So again, just showing up, we are already achieving 21% over the in place, where the business plan was at 37%. So once we do start renovating, I am confident that we won't just meet, that we will be able to exceed those rental rates. And this is the slower leasing time of the year too. So, nothing but positive and great things ahead. One thing that I would like to, mention, and I'm going to age and date myself here, but I've been in the industry, 20 years. And so I was part of the, downturn in 2008. And I will say at that time when a lot of people were getting nervous and, backing out or, not moving forward, those that did pay to play, per se, it ended up becoming a very lucrative, 2010, 11, 12 was extremely lucrative for those that, went full steam ahead. So, that's kind of just a few things for me on the market. I will also, as I'm sitting here talking about all this forward movement and how great it is, I did read an article the other day and I thought it was very interesting. And I like the way they put it. It was from Marcus and Millichap, but they said any slowdown that we do see in the multifamily sector as a whole, to keep in mind that slowdown is just that, but it's getting back to normal. It's getting back to COVID days. Those are still 5.8 to 10% rent growth days. That's the normal. That's kind of their worst case scenario outlook for multifamily as a whole.
Awesome. Thanks so much, Lindsey. And Barry asked this question. He asked about what the projected distributions would equate to. So before we dive, I want to come back to what you just said, Lindsey, but we broke it down here just so that you can kind of expect here. You can see here the cash flow. You've got $6,000 a year, and then total cash flow projected at about $30,000. Projected equity at resale is $60,000. This is when you're investing $100,000, which brings your total investment value to $190,000. Now we also did it for $200,000. Obviously, that's just doubled. So we have all of these details in the business plan in the link that Lindsey or that Tasha is dropping in the chat. That is where you can go and visit all of these slides. We're just going to touch on each slide a little bit, but like I said, you can dive into these and figure out the math on exactly the amount that you guys are wanting to invest. But Lindsey, to go back to what you were saying, I actually have this slide right here that talks about the population. Do you mind talking, you mentioned a little bit about, the market and the growth. What do you see the projected population to be this year or in the next 5 years?
I'll be honest, I can't give you like an exact number or, specific, I guess what a third party would say those projections are. However, I can talk to, the fact that the influx and the growth into Orlando, again, is number one, number two in the country and has been in that spot and continues to be there. In addition to, that influx, a lot of that is into not just Orlando, but where we're kind of located, which is just right outside of the up and coming Rosemont district. That particular district, I think it's like a $1 billion, new build that they're doing that is just going to only elevate our property being so close to that space. You were close to education, and as I'm sure, if you don't know, Orlando and the education part there is top in the nation as well. I hate, it sounds kind of cheesy, but really all signs point to Orlando. I try to poke holes in things and find not the negative, but I definitely pick things apart. And Orlando is just a strong, I don't want to say bull market, but white hot market. It's not slowing down. And I'm excited about it.
I love it. So Diana asked, what percentage is occupied right now?
So today they are 92%. We knew going into the closing that it was going to drop. We were watching what the delinquency was. So we had to right out of the gate just get out some of the non-payers so that we can lease them up at the higher rates and move forward. Right now we'll take the next 30 to 45 days to stabilize up to 95, 96. And then from there we go renovations and those rents go up $300 to $400.
So you actually brought up a good point. So to Lindsey's point, we have a specific takeover process. It's essentially the same for each property or each project that we have. But like Lindsey said, we have to customize it to the specific property. What's the community needs? So Lindsey, maybe even Ryan, if you want to jump in, why don't you tell us about that takeover that process, and why do we have it specifically in this order?
Do you wanna talk
Ryan, you're
from
on
the-
mute. You guys, what an amateur. He's on mute.
Listen, it's, I think you muted me, Melissa, right? I mean, but wax poetic here for just a hot minute. So, the reality is this: you see a lot of operators, and what happens, in today's market, the scarcity in most people and the fear that they have is, what's going on with the market, right? You've got inflation, you've got interest rates going up. There's a lot of things in the market that can draw to some scarcity, and I look at opportunity, like Lindsey said in 2008, where was the opportunity? Those that invested and smartly invested were great. One of the biggest things that we look at is this: operators out there that are blowing through their CapEx, right? That they're just blowing through it. They don't have a plan in place. They're just going in and fixing up as fast as they can. What happens is that limit or minimizes the amount of capital they have. If you blow through your CapEx, what happens? You have to now use, right, operational income to be able to pay for those expenses or those CapEx items that you may need to do in the future, right? So I like to say that we have a plan, right? And this is where I know that Lindsey, you and I align very well is, in that plan is, I like to say there's three phases. There's a stabilization phase, right? Taking over the property, identifying what needs to happen. You just asked, I'm not sure who asked it, but where are we at occupancy wise? Make sure that we get with the management company, identify the needs that we have in the, in the apartments there, right? And really just looking at the business plan, implementing the business plan with our management team. We don't want to go in and we don't want to just blow through money right out of the gate. So I like to say first phase is about a stabilization phase. I like to say it could be anywhere from 6 to 10 months, right? Depending on how fast your management team comes in and identifies, the problems that we may have to stabilize that. So 6 to 10 months. Then you've got about a 10 to 18th month period that I'm a huge golfer. We're in Orlando, Florida. I'll talk golf, right? Lindsey, I know that Gabe's a basketball player. We'll get him into golf. But Lindsey is a golfer, so she gets it. Saturday day is what we call moving day, right? Melissa, your son's a little protege, so he's a little 6-year-old. The guy's going to be on tour for sure. But Saturday's moving day in golf, right? And I like to say the 10 month, about 18 month period is what we call moving day. That's where we're going to take the business plan. We're going to be super aggressive. If we can be aggressive sooner than that, awesome, right? But stabilization in an apartment is so important, that way we can fix some of the things we have. Like Lindsey said, if we're going to go fix up the units, awesome. If we can achieve rent increases without doing a lot, we'll do that as well, right? So typically after that's moving time, right? That's where we implement value add opportunities, right? That's where we start fixing up interiors, other things that are really going to generate more rent to us, okay? And then in the 18th month period to about the 24th, we're going to identify what we want to do with the property, right? Listen, where are we at with the market, okay? In 2008, about 2010, the market started coming back, okay? We know that. So, we're in 2023 right now, so potentially, 2025. Where are we at in the market, right? How the property is performing, and what are we going to do? I know someone asked a question in the question area, Melissa, that said, why sell the property, right? Why not refinance it, pull some cash out, okay, and do that? Well, one of the reasons we're able to achieve, or we have achieved in the past a 38% return is for the reason that we identify in the 18 to 24 month period. Now, I would ask the group a question, and I would love to know we'd love to ask our investors questions, right? What would they prefer? If we could, accomplish what we want to accomplish in the business plan, right? Get those rents, $400 or $500, right? Where we're at, and be aggressive in there. And we can take all that equity and go to another property, right? That's been mismanaged and be able to do that and maintain 38%. Right? Would you rather do that and let your money work for you in other properties, bigger properties, same properties, right? But having us maintain a higher annual rate of return for you? Or would you rather refinance it and just get an 8 to 10% return? Right? Now we could potentially refinance to take that money and put it into another property. Yeah, that's a strategy as well. But one of the things that we do, right, Melissa, is we sell and we take that property into another property that could be, $200-300 under market rent, move to another property, right? And that's exactly why we do that, and so, that's why we're excited about this property. But those are the phases, Melissa. It's typically, stabilization, implementation of value add in the business plan, and then identify when we want to sell.
Ryan,
So I think, go ahead, Lindsey.
I was just gonna say, I would like to add to that with the multifamily sector, it's really intriguing to me over the years, my prior life where I was out on third party side, is I saw a lot of deals trade hands from ownership group to ownership group. And even more so now when I'm looking, at deals on CoStar and what the purchase price was for the prior, for the seller to the buyer and buyer seller. And that cycle of, it's the same property and they may have, gone in and done the upgrades, they achieved great returns. They were able to sell it, make money. But then the next person coming in, they may have a different business plan as far as the type of loan they're bringing in. Maybe they're getting a bond. So then it allows them to come in, even though during our time we spent the money, we made good money. They now get to come in and they're in a position to run their business plan that then is, lucrative. And it continues on that cycle because each lender is different, each business plan is different. And so they continue to grow value and work.
Absolutely.
Right. Hey, Melissa, I'd love to answer this. Leanne just asked a question, right? About, we talked about selling, right? And the potential tax implications of selling, right? And Leanne, I love your questions, right? Is, what do we do with it, right? Are there going to be capital gains with selling? Absolutely there is, right? However, we still have what we call cost segregation and bonus depreciation. Last year it used to be 100%, and that's gone down to not 80%, okay? Which is still great, right? It's still great. Here's the thing, we've already done a cost seg study on this property. And what does that mean for you? Right now for every 100,000, it could be anywhere from 30 to 70, 80% on depreciation, okay? On depreciation. What's that mean? Is if we don't utilize, all that depreciation, could we carry it forward, right, to when we sell? Absolutely we can, right? And we encourage you to talk to your CPA on that. But for us, we sell, like on that portfolio we talked about, there was quite a bit of money, right? That we had to put into other properties. Our investors all reinvested with us to put into the newer properties we got into, right? Why? Because, there's things out there, 1031s, a lot of people knew that there's 1031s, and what is this? Just offsetting your tax liability, right? But the guy said the government or politicians created, the IRS didn't create this, politicians created it, right? Because I love that everyone goes, well, it's Democrats or Republicans, they all do it, right? They all do it. And so
Wait, no politics, y'all. We are not going to
no
talk
politics, no politics. Yep. So you only depreciate the amount of years you'll hold it. So we do cost segregation. What we do is we go and do a study, Leanne. So that study gives us what we call accelerated depreciation. So there's typically 5, 15 years, and you have your 27 and a half years, and obviously you have 39-year well as well, but on the land, but you don't really get anything there. So you've got 5, 15, and 27 and a half years. What happened is the IRS allows us to accelerate our depreciation. So we're able to take that 5 and 15 years in 1 year, right? That 1 year used to be 100%. Now it's only 80%. I say 80% because that's still pretty good, right? One of our properties, we got $4 million in depreciation. That spreads out to all the investors, depending on your ownership, right? Now that 4 million went to 3.2 million in depreciation, still quite a bit. But you're able to do that and offset, right, your passive income, okay? You're able to offset your passive income. So the distributions that you get, you're able to offset those, right? So really, let's say you invest 100,000, you're getting 8%, that's 8,000 a year. You're able to offset, not pay taxes on the $8,000. But let's say you have a bunch of it left over at the end, right? And we sell the property, okay? You're able to utilize all of that money. So let's say you got 50 grand, we hold the property for, let's say 5 years, and you got 8,000, it's 40,000. So you're able to take $10,000. Melissa, I know that math was quick. I can explain it later if you'd like, okay? But you got, the rest of it that you can do and send over. So like on this one, it's 6%. So let's say you got 50, be 30,000. So you could take $20,000 of depreciation, offset it when we sell the property. That way you're not paying as much in taxes. But guess what, Leanne? In 3 to 5 years, there's going to be some properties out there. There's going to be some tax loopholes that we're going to know. What do we do, Melissa? We always have educational webinars that inform our investors of tax benefits that we have out there. We always have people on to educate you on the tax benefits of multifamily and how it can benefit your investment. So Melissa does a very good job with webinars and bringing those people on for you.
Thank you.
I said, yeah, y'all. I try to say y'all, but I got stopped right there.
And I think it's important to say that this is why you invest with experienced operators. We have a history of making sure that our investors are able to take advantage of the depreciation, take advantage of all the tax benefits that multifamily offers. So this is not our first property. We've been doing this for a very long time. In fact, we have exited 11 properties. So at this point, we know how, not only do we know how to utilize not only the market, but the benefits, but we know who to surround ourselves with to make sure that we know all of the ins and outs of what's being implemented. So, and to go back to what we were talking about earlier with Ryan and the takeover process, again, this is after years and years and 11 properties later, this has been perfected. So again, when you are investing with an experienced operating team, they know what is best for your investment. And again, stabilization is what you all want. You want your capital protected. And that is absolutely the goal. And then the goal is to make you a bunch of money. So we do that all in one, y'all.
You know,
Ryan,
what I love about this is we have close to $1 million put into this, just us, MF Capital Partners, right? Into the deal. So, that's what I love about it. Everyone says, hey, do you invest alongside us? Absolutely, we do. Not only our company, but as individuals, we invest also, right? And so we always want our money to work for us. But Melissa, someone asked you, what is CapEx? CapEx essentially, those that do single family investments, you can look at it as like rehab money, right? What is it going to take to fix the property up? How we want to fix it up, right? It's called capital expenditures. A lot of you might know it as rehab money, right? It's really the money that Lindsey gets to use to put into the property to fix it up as best she can. And I tell you, if there's anyone that guards that money better than anyone I've seen is Lindsey, right? And so she always puts thought into why she does it and how she does it. Karan asked, I think this is, I hope I know who you are. Karan, tell me if you're the Karan I do know out of Texas. If not, then it's a different Karan. But is exit going to be 5 years or less than that?
Wait. I think if Karan is from Texas, I think he would want to hear you say y'all right now.
Y'all. He's in Seattle, so different Karan. There we go. Okay. So yes, 5 years or less, definitely gonna be less. I'm proud to say that in our portfolio, we've never held a property, but I know you. Awesome. You have to shoot me an email then, Karan, so we can catch up. We're proud to say we've never held a property longer than 3 years. So it's our biggest goal, right? To get in, stabilize, right? Achieve these market rents that we want, be aggressive so that we can sell as fast as possible. Why is that? We have money in there as well. Our investors have expressed that is what they would like as well. They don't want to, get into an investment 5, 7, 10 years. In fact, it brings up a good point, Melissa. There's a lot of operators out there who will say, hey, you're going to get 25% returns. You're going to get 27% returns. And they manipulate the market, right? And this is what is frustrating is they manipulate the market. The way they manipulate the market is it's based off of a 10-year. We base all of our numbers off of a 5-year. So the numbers that you see and the returns that you see are based on a 5-year. If we were to extend it out to 10 years, you would see your annual rate of return go up. So that's a great question, Karan.
Absolutely. And we just got another question that asked, do you get the same return structure as you are offering to us? So my husband and I put 100,000 into this property specifically. Let me tell you, when I heard that the property was 300 under current market values, that's when I immediately said, all right, we're going to pull the trigger and invest in not only into our funds, but this property specifically. So absolutely, we get the same return structure. We get 6% upfront annually, and then 18 on the back end conservatively. And then Diana asked, is this investment rate of return and equity on sale? Yes, that's correct. So the 6% is the preferred return that will be paid out upfront. We pay those returns out quarterly, and then that is the 18% that we're projecting is annual rate of return, and that equity portion or the big bulk of your return is paid when we exit the property.
Hey, Melissa, if I can interject here, Latasha asked, why was the the CapEx budget not already raised in the initial raise? Here's the thing. I'm going to be very transparent with y'all. We have a fund, okay? We have what's called the MF Aloha Fund. We could easily have just closed it out, okay? This is for non-accredited investors. There's not too many opportunities that non-accredited investors can jump into. We typically go into 506Cs, which is accredited investors only. So what happened is we had a lot of investors say, hey, we want the opportunity to invest with you, okay, that are non-accredited. And so that's why we gave the opportunity rather than just take our fund, because that would be the easiest thing to do, just put it in. Okay, we're giving that opportunity to non-accredited and accredited investors to be able to come in and fill that raise. So here's the thing: we could put the 1.75 in and close it out, but we want to give more opportunity out there for y'all to for y'all to be able to do it. Melissa, did you catch that?
Yep, it sounded great. Sounded
Awesome.
very natural.
Natural. Justin, now when you have to ask, I don't feel like it's natural. But Justin, you asked, I've been told that if you hold a property for 10 years, you no longer have to pay capital gain taxes. Any truth that? Now here's the thing: I'm not a CPA, but I'll tell you, I think you're referring to opportunity zones. In opportunity zones, if you hold them for 10 years, then you don't have to pay capital gains. But that's just that. So it's really opportunity zones, Justin, to answer your question.
I was just waiting to see if you would say y'all again.
Y'all.
You guys, he has horses. He's a cowboy. He's a cowboy.
Of course, I love my horses. You bet, I do. You ever come out to Orlando to see the property, guys? Listen, investors always come out to see it. So listen, I'll take you horseback riding. For sure, we'll have to make you sign a waiver, but you can ride horses with us. Because after seeing you ride horses, Melissa, everyone needs to sign waivers.
It's very true. It's very true. I get it. Oh, this is awesome. Okay, guys, we're right at our 30-minute mark. But what I'm going to do, I'm going to go ahead. For some reason, my screen just stopped sharing. So let me pull this back up. I have a simple QR code. Now, what that will do for you guys is that will allow you, if you just pull up your camera, and if you pull up your camera, it will show you the specific link. Now, that specific link is going to take you directly to the deal room. There you go. That is you can see that now on your screen. So if you pull up your camera, that's going to take you to follow where the next steps are. The next steps, like Ryan mentioned, we don't have a ton of capital here to raise. So this is going to go quickly. Now, Leanne, you just asked if you could see the property. Oh my goodness, it keeps taking me out here. I apologize. So what we can do, if you guys log into this, if you share or if you log in using either your camera, using the QR code, or you're more than welcome to follow the links that Tasha has put in there as well. Now, by doing that, you're going to see a bunch of pictures of the exterior, of the interior. So you'll be able to see all of that and a little bit more details about the property as well. We want to be respectful of your time and keep this a short webinar instead of diving into all of the specifics. So I'll pull up, you can see there's a picture of the outside right now. Again, 140 units. But here is your QR code. So if you follow this with your camera, that's where you're going to be able to go and view not only more details about the opportunity, but also the pictures. So next steps. The next steps, after following this QR code, it's going to take you to the deal room. The deal room is going to ask you to do two things. It's going to ask you to gain access to the opportunity. So you're essentially creating a profile, right? Now, after you create your profile, that's when you'll go back in and hit invest now. By clicking invest now, it's going to ask you to create a commitment. Now that commitment, your reservation, that is where we're going to be able to hold your spot as long as your documents are completed. Because we're only raising 1.7, that's all that's left right now. I don't want you to miss out on this opportunity. So don't forget to go in and execute your documents. Now you'll have two opportunities. You can either ACH your funds right there in the portal, or it'll give you the wire instructions for you to print those instructions out. Now, if you have any questions, you want to jump on with our investor relations team, there is a link in that deal room, or the link that Tasha has dropped in the chat as well. But you will always have our contact information. It's in the deal room in multiple spaces. We want to make sure you have a line to us. But most importantly, this opportunity is because we are passionate about everyone having an opportunity to invest in what the 1% invests in. We want to make sure that we're providing these opportunities. So don't miss out. I always hate to hear from investors when they wait too long and then they're not able to get in. So again, any questions, please let us know. I know a couple of you have asked about using your IRA account. We absolutely can accept IRA. You're more than welcome to either get on a call and we can help you if you don't have a current signatory, or if you have your current signatory, then you can print these documents and give them to your custodian, and then they'll be able to execute them on their end. Or if it's self-directed, you can execute it on your own. Just don't forget to create your commitment and also execute your documents. That is what's going to save you. So please, please don't forget to do that. Diana asked, is there a contract that both parties sign? Absolutely. So the documents that are in the portal, you're going to execute them on your end digitally on the portal online, and then our management team executes them as well. So you will have an executed copy in the portal that you can get a hold of at any time. Now, can I invest with a real estate fund? Santos, if you want to schedule a call, we can do a fund to funds. So I'd love to discuss that a little more with you. Just, you're welcome to schedule a call and we can go into those details. Now, a couple people have asked if the recording will be delivered. Absolutely. We'll make sure that this recording is sent out tomorrow to everybody that registered. Now, Sam asked, do we choose Class A or Class B? So it's only Class A. So you would be choosing Class A2. So that's the class that, unless you're investing over 2 million, then you would choose Class A1, but we don't have that much available. So Class A2 is where you would be investing in. And I think, oh wait, no, one more question. If you aren't able to invest 50,000, can we still invest? So typically our minimum investment amount is 100,000. We have lowered that to 50,000 just to, again, we want to make sure that you guys have the ability to get into this opportunity. So if you have less than 50,000, I will probably want to wait till the next opportunity until you have the ability to get that capital. But you're more than welcome to schedule a call with us and we can go over what that amount is specifically. And I think that I got all the questions. Rapid speed.
Alyssa, someone asked, how close is the property to the Amway Center? Because the Orlando Magic are a great basketball team. Listen, we're only 5 miles away from the Amway Center, 5.5 miles, right? So no, I'm just kidding. I'm a season ticket holder to the Magic, so I had to throw that in there because the property has a Magic blue on there, so I had to throw that in.
But it's true. It's absolutely true. The Magic is an incredible game. You know why? Because there's a lot of good-looking men on there. Just saying.
All right.
All right, we're 45 minutes in. I'm so grateful for you guys. I'm so grateful that you guys were able to jump on, and a huge mahalo to everyone that has been involved in our last 11 properties. And those of you and your continued support, we are excited to work alongside you, and this partnership is incredibly important to us. So we hope you guys have an incredible night, and we look forward to working together.
Awesome. Have a great evening, guys. Thanks so much.
Thanks, you guys.